What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and though it probably feels like at this point this has turned into a NIO only channel, I do cover crypto, Virgin Galactic, Tesla, and ChargePoint as well. But for today, I'm back with another video on NIO specifically. They had their earnings call this past Thursday, and we have to discuss the latest and greatest. I'll use our time together to take a quick look at the stock performance this week, hit on my main takeaways from the earnings call, follow up on where the Wall Street rating consensus now is. There is news of a new major investor who has now taken a position in NIO, so I gotta cover that. And of course, I'll share my perspective on it all along the way. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I do recommend watching all the way through so you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So jumping right into it, NIO, after holding steady for most of the week, took a nosedive post-earning call and posted a loss of 4.55% for the week. The reason? Take a quick listen.
The company beat Wall Street estimates on fourth quarter earnings, but it missed on revenue guidance. Let's bring in Yahoo Finance's Inez Ferre, who's following that story for us this morning.
Its fourth quarter revenue came in above expectations. First quarter revenue, though, that guidance coming in below what the street's expecting. So there you see the results for NIO for its latest quarter. Its deliveries for the fourth quarter also coming in above what the street was expecting. And CEO William Lee noting in the earnings call last night the supply chain disruptions on semis, on raw battery materials. The price of lithium has gone up almost 500% in the past year. He noted COVID lockdowns and the international situation. He said all of this adds to cost pressures.
You heard it right. They missed on forward guidance. They guided to 25 to 26K for Q1 2022 on deliveries. Wall Street was looking for 28K. That right there is the perfect example of making the narrative fit the need for profit taking. So let me explain what I mean by that. NIO beat on the top line for revenue and met expectations on the bottom line for EPS or earning per shares. From the lows last week of $13.01 to the highs on Thursday of $23.34, that's a 45% ROI in just over a week's time. That's a pretty significant move in a very short amount of time. So yes, traders cashing in is to be expected. And that is the simple reality behind post-earning drops. Even if NIO had beat expectations all the way around, the sell-off would have likely happened anyways, so people could lock in some of those gains. Nothing alarming here in my opinion. Now, I'm not going to run through all the financials, but I'll link the slides if you care to go through them. The main takeaway is that NIO's financials are in a very good spot, with $8.7 billion in cash and cash equivalents, and they've improved their year-over-year performance in just about every single category with improved efficiency. Their forward guidance on vehicle deliveries that was considered a miss actually represents, if I round up, a 25 to up to 30% improvement depending on where they fall in the range for a year-over-year improvement. The resulting revenue, if they can hit that guidance, will be in the range of 1.511 million to 1.567 million for a year-over-year percentage increase of 20.6% to 25.1%. So the reality is NIO is well capitalized, growing fast, with a new factory confirmed to be on track to open later this year. This means that they'll have increased capacity to support their European expansion. The expansion plans, by the way, were confirmed for Germany, the Netherlands, Sweden, and Denmark for 2022, as I covered last week. The thing is, despite the so-called miss, NIO posted solid numbers. Last week I told you that the real test for NIO will be how the projections are adjusted on the back of the earnings call. My expectation back then was that the consensus price target would get revised lower to account for the various near-term headwinds in supply chain disruption and geopolitical risk, just to name a couple. Well, here are the numbers. We now have 16 ratings total from Wall Street. The average price target did drop to $45.51. That is still an impressive 128.58% increase from the current level. That's pretty massive. On the high end, we're looking at $87 that we could hit, and the low end comes in at $29. And just in case you didn't catch it, we now have 14 buy ratings, 2 hold ratings, and a big 0 for the sell side. And of course, the reason no one is recommending a sell rating is because analysts all fully understand that the macro backdrop is what has dragged the NIO stock price down. It has nothing to do with NIO's business fundamentals. That is the reason why I've been telling you for weeks now that this continues to represent a massive opportunity. more people are finally taking notice and coming to the same conclusion. This now leads us then to Friday, when a famous fund manager took a position in NIO for the very first time. Kathy has been diversifying into Chinese EV stocks since last year. She bought BYD, then XPeng, and it was only a matter of time before she added to NIO. Well, with the dip on Friday, Kathy ARKQ fund bought the dip on NIO to the tune of 420,057 shares, worth about $8.4 million, and representing just about 0.5% of the ETF total position. In that same trade, she also added more to BYD while taking some profit on Tesla, probably in part to fund the purchase and also to allow more room for Chinese EV players. For the record, Tesla is still the top holding in the ARKQ fund, or ARKQ. You're probably thinking to yourself, well, that all sounds great, but where do we go from here? Well, here is my take on that. I said by my call last week that we have hit bottom on NIO. The stock traded as I expected and told you it would this past week. From here, the grind up continues. As the macro backdrop improves, so will the speed at which the NIO stock climbs. Again, it's not going to be a straight move to the upside, but the trend is reversing, and not just on Chinese stocks because they were so beat up, but the overall sentiment around markets is turning bullish as we bring Q1 to a close. Here is the last thing I want to leave you with, and this is a fun one. I told you in previous videos that institutional investors built in a guaranteed 10 to 15% return this year minimum, simply by trimming their positions ahead of the first rate hike and putting the major indices into correction territory, right? If you've been watching, you probably remember this. So here is the fun fact for you. The chart you're currently looking at is every market correction since 1980, with the 2 years following after that. Each trend line was overlaid. What this tells you is that on average, the SP 500 will return 32.4% gain at the 1 year mark post-correction, and goes on to return an average of 43% at the 2 year mark post-correction. This has happened without fail and is a historical fact. The bottom line, well, assuming that NIO continues to execute, returns in NIO are more than likely going to severely outperform the broader market average returns from here on out, given how far down we had corrected. So ultimately, don't get caught up in the day-to-day narratives that you get fed so that the news can be sold. It's good to know from an awareness perspective on what could trip us near term. That said, if you want to make real sustainable gains, zoom out, understand the bigger picture, and invest accordingly. And on that note, I think I'll leave it here for today. Q1 is coming to a close, so it's time for my first full portfolio transparency update of 2022. Look for that next Sunday. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. As a reminder, I post every Sunday, and I'm currently working on a more crypto-focused video that I'll try and drop next week sometimes. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.